So I spent the last 4 hours digging through the Wall Street expectations, predictions, and estimates for the crypto market. If you hold some crypto, I bet you wanna hear this. And what I found out will shock you. First of all, two top firms on Wall Street which have been the most accurate so far in their predictions, being on the bullish or bearish side, AllianceBernstein, which had some correlation with Nancy Pelosi, and on the flip side you had Standard Chartered. So both of them, their analysts are still seeing Bitcoin going to 150 up to $200,000 by the end of 2026. And according to them, regardless of who is going to be the new Fed chair, they said that the pro-crypto policy will eventually shift, that will get escalation when the Clarity Act is signed, when the banks cannot postpone, reduce, or limit on or off-chain yields. Remember, there are many projects that people are interested. They're buying into the project and they receive particular yield just by holding the coins of the project or staking it on this blockchain. So this is very important for developing of the DeFi space. This is something that has been a bottleneck for the reversal of the crypto, according to them, because there is a major unexplored market. Remember, we had NFT pushing the crypto cycle to new all-time high. Why? Because it was new unexplored market. We saw the same thing happening with the metaverse, right? As crazy as it sounds, the new unexplored market of the metaverse, selling real estate in the metaverse, having big companies like Adobe or Nvidia or Lego, they already purchased lands in the metaverse. So this actually pushed crypto back in the new all-time high cycle. So this is what is going to be. It's no longer the technical breakdowns. It's no longer the inflows or outflows of the ETFs. Second important point over here, Bitwise and Galaxy. Their prediction is breaking the 4-year cycle, something that I already mentioned in the previous videos. This is already dead, because if before the cycle was based on lack of adoption in the institutional side or on the government side, this is no longer the case. Government already created a Bitcoin National Reserve. Also, big institutional banks are offering their clients to purchase Bitcoin through the ETFs or Ethereum through the ETFs. Third important element over here is that a lot of these institutional investors, investment banks, have been staking up crypto on their own balance sheet. For what purpose, we still don't know. Also, the biggest banks have been building own blockchain systems using own cryptocurrency. So some people are saying they're building their own stable coins that are related to the bank themselves. So they're going to use it probably for transactions, some internal use. But this is a sign that DeFi and on-chain platforms and the whole ecosystem will eventually play out in real life. Second, Bitwise and Galaxy also see the connection in the volatility between the Mach 7, the technology stacks, the AI stacks, Nvidia, and their consolidation that is matching the sell-off in crypto. They're saying that effectively crypto is AI stocks without the AI. It's looking like Nasdaq without all the big technology companies. So effectively, the matching price action has been accelerated on crypto. If Nasdaq is down 3%, crypto will be down double, and vice versa, because the volatility has been evaporated at this point. Third main important element and metric Wall Street looks very closely. Remember, Wall Street is not throwing darts at the board. They're not guessing. It's no guessing over there. They're looking at the surveys. So the broader surveys Wall Street run show up that 74% of crypto holders still in Bitcoin, with experts like this in CoinDesk, right? They're viewing the current dip as cautiously constructive. What this even means? They're thinking that this is effectively a bull resumption setup. They're seeing that some of the OG crypto holders, the people who have had their wallets untouched for the last 10, 15 years, some of them have been taking profits, but they just took profits from the top of their portfolio, 3 to 5 to 10% max. they didn't liquidate the entire crypto. What this even meant that these people said, okay, the market looks like it's gonna take a breather. The market's gonna say a little, I'm up substantially, I haven't cashed out for the last 15 years, let me take some chips off the table. So these people took some chips off the table, and surprisingly, 2 days ago, someone actually sent to the original wallet of Satoshi Nakamoto 2.5 Bitcoins. And the speculator said, okay, this is the second wallet of Satoshi, he's transferring from one account to another, which makes no sense. But the main sense here is that when you have shift from one wallet to another, when you have active moves, there is 100% something coming up very soon. These people are not moving funds or crypto from one wallet to another, from exchanges or off exchanges, if there isn't a very strong action coming very, very soon. A lot of these people have been staying put for 10-15 years, so they have no issues staying and waiting much longer. But when you see some of them taking profits, a lot of the market actually use this as a negative catalyst to dump the market overall. Fourth important element here based on the surveys. According to this surveys, the sentiment and the views of investors who are still holding and who are still down, majority of which are down, institutions, investors, they're seeing and they assume that no major black swan event is coming around the corner. They are optimistic and bullish for the second half of 2026, and they're seeing this as a bigger breather for the market, which allow the market, remember Bitcoin, to hit these levels from current all-time high of 126 to 150, which is not so much, it's another $24,000, to the absolute top of 200, some people calling for 240,000. You understand, if the market was to do the new all-time high of absolute peak of almost $250,000, it needs to dip more, right? You understand, the bigger the dip, the bigger the breather, the bigger the liquidations, the bigger the potential upside could be based on something known as elasticity, right? Think about elasticity. The longer it pulls, the faster it stretches and expands. So if you really believe in the surveys, and if you really believe in Wall Street expectations and predictions, you should understand that these people have no better options to invest. If they believe that the AI bubble is very close to its peak, if they don't see better opportunity to invest, when you see that stocks are falling alongside gold and silver, and the new Fed chair will make the dollar great again, the only options for institutional investors still will remain crypto. When you consider treasuries likely won't be as attractive opportunities for institutions anymore. Let me know what you guys think about this.